Mode.
Good evening, everyone, and welcome to Annual Markets Webinar of 20. Oh, sorry, this was the wrong date. So, 2nd of July 2014. Why do traders lose money? So, we will be talking about why traders lose money and what traps you should avoid in order to be profitable. So, before we begin, of course, our risk disclaimer. Online educational materials are developed by Unrealistic Markets Estonia for a global audience. Therefore, please take into consideration that the information in this session will not be suitable for everyone. To get the corresponding information on charting conditions and any other detail, please visit www.unrealmarketsglobal.com, select your country of residence, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you are also proceeding further with me. And final part, Unrealistic Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author, it's me, and in no way it represents the actual suggestion for a trade. These are not MUK's opinions, and the website in the video is not the .co.uk website, but the globalnews.com website. Forex is risky business. This is a personal opinion only. This webinar is for informational and educational purposes only. So, again, I always need to remind you when we are doing psychological webinars, money management tripod, it's of utmost importance. Then we will continue with why do traders lose money. Always remember this for now and forever. Successful trading is based on tripod of successful trading. Profitable trading strategy, which should include systematic approach based on technical and fundamental analysis, then a proper risk management, and finally, trading psychology. Trading psychology is something you need to work on if you're not sure which path to take, or if you're not sure in yourself, then you should work on trading psychology. If one leg falls, of all of those three legs, every single leg will fall apart and tripod will crumble. So don't let one leg to fall apart. All of three of them should be stable, standing firmly on the ground. Of course, no need to remind you, you should always set three tasks: primary, secondary, and the third task. Not to lose a capital and stay on the floor for many years. Then gradually multiply your equity figures, and third thing is earn profit. Many traders set the third task for the first place. They only want to earn profits. That is the worst thing you can do. First, you need to preserve the capital, and only then, when you are profitable enough, you can earn profits. Try to think this way. Now, we will be talking about each important thing. Why do traders lose money? All of those things I will mention. Emotions, psychology, spiral of doom, leverage, search for holy grail, not using stop loss. The market is not the crowd, the market is us. Be an individual, crowd cannot be the market. Not understanding the markets. As individual, beat the market. Again, it's very, very important. Not accepting responsibility for losses and mistakes. Bad trade management. Entering randomly, not mastering a proven method. And unrealistic expectations. First thing which we will talk about, if you remember psychological webinars, are emotions. I just cannot stress enough how mastering the emotions is important. There is a market cycle of emotions, and you need to know which cycle is possibly the most profitable and which cycle can be your nightmare. Let's say that you are a beginner forex trader, so you will be faced with psychologically testing. Usually when you are beginner trader, you will suffer from euphoria. Okay, euphoria. You will be making, I have many friends who want to trade, and they're always asking me, okay, can you help us? Can you teach us? I'm saying, okay, guys, you need first to watch Admiral Market webinars, and then you need to find your strategy. There are a lot of strategies. Try to pick one. I just don't have the time to teach some of my friends how to trade. One thing is for sure. They all start making money without any knowledge of the forex market. They open the trade randomly, thinking that euro dollar, of course, will go up and down. They're not placing stop losses. They don't know what to do. They don't know what candlestick means. They don't know anything about forex market. But on demo account, they have made a couple of $100s in a single day, and they are very euphoric. They want to trade. They want to put their money. They will, you know, they are very, very excited about it. Well, they do not know how wrong they are. They are very, very wrong. You should always start from optimistic, not from euphoric, or content and hopeful. These are all stages which you will be going through during your years of trading. And one thing is for sure, there is an upward and downward spiral. Yeah, upward and downward spiral. If you begin trading from this point or this point, you will be successful. Okay? That is, I just cannot stress how important is that. And now Rai is saying, so true, some newbies treat trading like casino. Then they learn from mistakes. Yeah, and each single trader I know have learned from their own mistakes. But fortunately enough, we are here with you, me and Chris, to help you not to repeat those mistakes. So this is the best stage to start in. So being optimistic or hopeful or content. So basically treat this as support and resistance. Now, you know from price action trading, when do you want to buy? When do you want to go long? At this point. Because if you are there, you will be sucked in upward spiral. Also, if you sell from here, you know that you are okay because you are again sucked into upward spiral. But in trading, if you break the support, okay, where will the trend go? This is long, this is short. Once the support is broken, trend is to the downside. So you will be sucked in a downward spiral. Okay? Now pay attention to this slide. When you start optimistic or content, that means that you have already accepted a potential loss. Not many traders want to accept their losses because they are not sure how to do it, how to recuperate from those losses. And when they not accept their losses, they soon become involved into a downward spiral. And they will surely lose the money. Then, starting optimistic, it means that you probably already know that your system or method is quite well, and you are ready to ride the roller coaster with increased chance of success. When you start to win, try to be less euphoric about winning. Because euphoria will lead you to closing positions too early. So it is not good unless you're scalping or using a trailing stop. Okay? Now, if you're sucked in downward spiral, first there will be a sort of boredom. You will be thinking, yeah, my system is okay, but Forex is not hard. But then when your trade starts to lose and you maybe suffer from a big drawdown, you will be starting to be pessimistic. And this is very bad. You will be sucked into the point of revenge. Revenge is the worst nightmare of bad traders. I cannot say bad traders in its own sense, but maybe it's better to say bad trading decisions, because this is psychology and you need to work on your psychology. That doesn't make you a necessary bad trader, but your psychology is bad. Revenge trading is very bad because losing trades will become revenge trades, doubling your losses. At this point, when anger is overwhelming you, you can also start to make revenge trades. Insecurity then will lead to new system search and very depressive state of mind. That depression can hurt your loved ones. Okay? Trying to exit spiral of doom can be very painful, and very often it's impassable. It's very hard, guys, to recuperate from this point, then from this point. So if you're suffering from psychological and bad psychological emotions, and you know that you will be sucked in a downward spiral, at least try to save yourselves around these points. Because if you are swimming through these points, you will be sucked in this spiral again, paving your way to success. But if you go deeper and deeper and deeper, it will be darker and darker and darker. You know, sea, oceans and sea. While you're swimming close to surface where water is shallow, you will see the light. But the longer you're swimming across the sea, the darker the water will become. And potentially, it will be so dark that you will be very, very afraid and you won't be able to swim to this point again. So always pay attention to yourself, to your mind. Now, also I need to mention a search for Holy Grail before I move to greed. It's also why traders lose money. Constantly changing systems without even trying those on demo account is called a search for Holy Grail. Traders are trying to find a proper system which will give them money, will give them profits, but they are unfortunate because they are only losing. Buying and downloading different stuff without the help from professional. Using PDF systems and PDF methods is a very bad thing to do because they don't explain you correctly what you should do and what you should avoid. Not demo one particular strategy for at least 1 month. If you're not demoing one particular strategy for at least 1 month, then you will be again searching for a Holy Grail. Try to demo it at least for 1 month. Also, sometimes the problem is not in you. The problem lies in system sellers and fake mentors because they are trying to sell you so-called snake oil. If you buy, okay, it's good for them, but it's not good for you. Okay, greed is also one of big reasons for dropping into spiral of doom. Greed is a selfish and excessive desire for more of something, for example, money, than is needed. So if we become very optimistic about a trade, then we enter a trade and we easily can be carried away and expect it to move further and further without unlocking the profits. That will create a fog on our perception, so we will be blind to real market conditions. Once we are in a loss, okay, we have a stop loss, then let's respect our stop loss. But once we are in profit, let's secure those profits. Okay? Greed and fear are very strong and can have an impact even on most experienced traders. Greed and fear are also two of the reasons why traders lose money. Holding on to position for too long is a first symptom of greed. Over leveraging, enlarging position size, also greed. chasing the markets, it's both greed and fear of the loss. Revenge trading, it's the fear and insecureness. Taking trades without any fundamental or technical validity. It's also betting because you will trading randomly, or jumping in a position based on a feeling. Greed. Yves is asking, securing profits, does it mean closing too soon? No, you don't close your profit soon. But let's say that you are, I have made a Twitter update of my New Zealand. Yeah, good example, good question. Look at this example today. New Zealand dollar for 2nd of July. If you were selling there, where I showed you, you would have been 22 pips in a profit once I made my Twitter update. Now, you won't close a profit, but you put your stop loss to break even plus 20. If there is a momentum, your trade may be 35 pips in profit. Then you move your stop loss to plus 30. Maybe it is that you're closing too soon, but then you're still protecting your profits. But for that kind of trading, you need to know your stop loss, and you should never move your stop loss. So don't be greedy, protect your profits. If you take 20 pips out of single trade, it's good. Leverage. I can recommend no more than 5-to-1 leverage. And now read it on your charts. If the account balance, you can memorize this. You can print screen this, whatever, but use it because it will be, you will be safe. So, if the account balance is $5,000, don't trade with more than 2,500 per position. It's 0.25 empty 4 lots. For $10,000 maximum, I can recommend 0.5 lots if you're using a stop loss of 30 pips. Don't ever risk more than 2 or 3% per trade. I can recommend 0.8, 0.9 or less per trade. Use this formula, stop loss plus leverage divided by 100%. And you will know how much you're risking. Try to trade with 1 to 2 risk to reward. So in these market conditions, unstable and volatile, or if you're trading 24 pairs, not 24, more than 10 pairs, it's okay if you trade with 1 to 1. But be sure to have at least 60 to 40 win to loss ratio. It will depend on your method. Now, not using stop loss. It's a very common mistake of newbie traders. I personally know a couple of ex-traders who lost their whole account, even $20,000, because they didn't use stop loss. It's a mistake of newbie trader. Seasoned and experienced trader will not tell you, will never tell you that you should ever trade without a stop loss. If you're hoping that the price will reverse, well, it's only a hope. That isn't a valid thing to be thinking of. Because the price may reverse or may not reverse. But in the worst scenario, your account will be blown away. No logic in doing that. Use always your stop loss. My usual stop loss is 30 to 35 pips per trade. If you don't use your stop loss, eventually your account will be burned. Now, you need to know the market is us. I will answer, guys, all of your questions later, just as soon as I finish with the webinar. So the market is us. The market is not independent of us, it is us. Why most traders lose money, and when traders often often fail to realize is that the market is collective movement of all traders' actions and reactions to their actions and to other people's actions. In other words, the market is a giant feedback loop which is showing traders a thermometer which is reading social mood and which many traders are operating. So most traders seem to think of the market that there is something that has some external value outside of price. So guys, it's not true. The market is us. We are making those decisions. Market will not make decisions instead of us. It is us who are making the decisions. So don't underestimate yourself. If you're not believing in yourself, then it will be very bad for you. Reviewing market decisions can be achievable if you know what to do. So you can review your decision, whether to buy or sell, but you need to know why you're doing that. Entering trades randomly without any proper technical analysis is, I need to say, stupid. Seasoned traders also make some of those mistakes, but those traders know how to manage those mistakes and how to overcome their losses made by those mistakes. Market is not independent. Market is very dependent of traders, both retail, both professional, hedge fund, and all operating traders on Forex market. So don't think it's independent. It is dependent of all of us. Guys, you need to know that you should get apart from the crowd. So you need get apart as individuals. The crowd is not a crowd until most are involved. Think about those sentences. Crowds cannot create strong trends until most are involved. A trend won't stop until nearly everyone is on board with the crowd. When everyone is on board, it reverses. It is always like that. Since it's the big money that got the trend started, so we cannot start a trend. Me and you, none of us can start a trend. It's the big money that has to trade and has to start a trend. And will likely be the first out. So a very small percentage of traders with the biggest pockets is likely to stay in the winner's circle, even if that means making market average returns. The large number of small traders who jump on trends too late or too early and then tend to exit trade too early or too late will create the high percentage of traders who lose. So always remember, guys, big money is what makes the market move. It's not us. Most traders losing money, which lose money, it's normal thing in market, because if one of us loses, the other needs to win, and vice versa. Only the one or the few people who really understand this concept may manage to make money at this market. Buyers and sellers get exhausted, get elated or sedated any time frame. They usually experience short and long bursts of emotions, which will result in short and long-term actions or reactions. And that makes a valid chart pattern. So always remember, guys, do not enter, it's normal, when trend is too long, so don't enter a long on a resistance or short on support, because the big money will probably close their trades and you will be getting caught into the other side of the market, losing side of the market. Okay? So the only thing I can say that crowd can win or majority can win is when there is a shift in overall productive capacity of society. Let's say last one was euro dollar fall 2008 and 9. You remember when euro dollar was falling. That is the only exception in the short-term history when majority wins, because everyone was shorting euro versus dollar, and you know, it was easy to trade, right? Today things have changed. We cannot trade like that anymore. As I said, you should be an individual and you should master a proven method. Always master a proven method. Be an individual. Be yourself. Traders who don't have definable and mastered trading method are hurting themselves because they essentially have no trading edge and are just shooting, guys, they are shooting in the dark. When you learn one effective trading strategy, for example, price action, you will eliminate the problem of fear and second guessing. The key for this is to understand true nature of the markets. True nature of the markets. And you need to master an effective trading strategy. Let's say price action. For example, many traders will jump around from one trading strategy, one trading system to next, never really giving one enough time to truly master. So you need to master the method. You need to accept responsibility for losses. If you don't accept responsibility, if you don't accept your losses, you will be doomed. So we are all human beings, and we all have a tendency to pass the blame to another. When you are trading badly, it's usually your fault. It's not my fault. Because if I saw that my Swiss yen trade went 10 pips in drawdown, I still believe that I will be managing that trade successfully. Even if it hit that stop loss, it doesn't matter. I have my protective stop. But I knew that when it comes again in a profit, I will close it because there was no momentum. I put that on Twitter. Either put it on break even or take the profit. Swiss yen trade. So that is my success. But even though if you didn't make any profit out of it, it would be your trading mistake if you didn't put your stop loss. If you use a piece of advice, I don't know, from someone else, and you lose money as a result, I always say it's your fault. Someone may try to help you, but some people try to help you even if they don't know how to help you. Okay? So you don't listen to them anymore. You need to listen to those who you believe, who you have seen how they are successfully trading. Big reason why many traders fail to make money is because they won't admit that they are themselves to blame for losses. You should always accept responsibility for your losses. Then many traders also suffer from unrealistic expectations. And that is, guys, very true. You cannot live with $1,000. You cannot live with $1,000. If you have $1,000 to trade with, there is no way on earth you are going to be able to live off your trading. You need to, that is a big truth, guys. you have to take into consideration what you can realistically expect to make each month or week. So that is assuming you will commit to effective forex money management, risk management, because if you are properly managing your risk on every single trade, there is just no way you can make enough money to live on if you don't already have a lot of money. Now pay attention to these words. This is very important, what I'm saying. That is all a professional habit. But if you're using effective money management, if you don't have a lot of money, you won't be able to live. My result is around 17% in last 6 months. That is around 3% per month. On $1,000, 3% is 30, right? Is it enough for a proper living? It's not. Don't expect to make 10% per month each month. If someone tells you he can make 10% per month, okay, tell him, give me the proof. Let him or her give you the proof for that. That is stupid. No one can make 120% per year. Maybe if they use a big risk, big drawdown, big leverage, 1 year maybe they can make it, but second year they may be they may lose everything. So the simple truth is, if you are using a good method, you have professional habits, and you are using effective money management, you need a lot of money to trade. Now, it doesn't mean if you cannot live with that money that you are not a successful trader. Because being a successful trader means that you are constantly making money in the markets. If you're maybe having a small account, but you are making consistent profits, then you are a successful trader, guys. So draw a line between that. Now I will draw you something so you can also understand what I'm talking about. 3% from 10,000 is 30. 3% on 10,000 is 300. 100,000 is 3,000, and so on. If you can make $3 with $100 account, then 6 months in a row, then you can think of yourself as a successful trader. So always when you're trading, you always need to be consistent. And you will be making money in percentage, not in profit. Even though if you can make $3 and you make $3 out of $100, you are a successful trader. Because you are doing proper money management and you have made 3%. Now, think about it, guys. Think about it. Banks are giving you 3 to 4% per year. And if you're able to make 3% in a single month, then you will be getting more money that banks give you in a year. So you are good and you're successful. And manage your mind. Always, always, always be yourself, be an individual, and manage your mind. Don't be unrealistic. Don't think you will, don't be greedy. If you're greedy, you're having unrealistic expectations. If you're having unrealistic expectations, you will be a losing trader. Yeah, and this is not the last thing. I wanted to talk about this part which I mentioned on beginning. Not accepting responsibility for losses and mistakes. That is also a thing which I will mention the last in this webinar, because it is most important that you know about not accepting responsibility for losses. I have mentioned that, but I need to compare it to something. The first self, if you are, I just hope that you are not alcoholic. But the first step in any self-help group, for example, Alcoholic Anonymous, is admitting you are the problem and that you yourself is having a problem. So if you remember those movies, how people are trying to cure themselves in groups, alcoholic people who are alcoholics, the first step is admitting that you are the one to blame, not other one. You yourself is to blame. If you don't do that, if you continuously blame other people or things for your trading losses, you will never improve your trading because you won't feel any need to correct your weakness if you don't believe. If you don't believe in yourself and if you don't believe you have any weakness. So the first thing is you need to believe that in yourself, and you need to accept the thing that you are the reason why you are losing the money. Okay? So you need, that is the very first step. Also, about one more thing before I forget what I was trying to say. Let's say that every, for example, just for example, and that is the answer to the question. This is good question. The first question is, and then I will tell you this example. I have heard from some good traders that playing a poker helps a trader's psychology. Guys, I never played poker, so I know how to play it, but I never played it for money. I'm not sure about playing poker is a good example because Forex is not gambling. Poker is pure gambling. It's reading of the emotions of opposite player. Forex is not about it. So I am not sure I can give you a good answer. I may say it's not a good example, and there is no truth in that view, because I know a trader who was a professional poker trader and he lost a lot of money. So I'm not sure that poker is adequate example for using a comparison to Forex market. So I wouldn't say yes. So I think there is no truth in that claim. What is the percentage you can recommend to trade if I open 5 trades at once? Who is asking me? It's Farkas. Farkas, if you open 5 trades at once, 0.5 should be your maximum risk. Okay? 0.5 should be your maximum risk per trade. So 5 times 0.5 equals 2.5. So 2.5 is your maximum of maximums. I can also say that if you want to make 5 trades at once, if you are a novice trader, do not risk more than 2%. If you are an experienced trader, you can risk 3%, but not more than that. Also, considering that question, let's consider for a moment that every trader followed the rule of not risking more than 1% of their account per trade and use similar strategies which were taught by professionals. So stops would trigger all over the place and prices would inflate and inflate, just as they do now with people adhering to their own strategies. Everyone trying to do the same right thing creates the same market movements as everyone doing their own wrong thing. Yeah, mostly those are retail traders. So I will repeat it again. If everyone trying to do the same right thing it creates the same market movements as everyone doing their own wrong thing. So you need to be above them all. You need to be a professional, individual. Okay? Now, the only thing, when masses, again, were right, was that year of 2008, of 2009, where markets were really bearish on euro-dollar side. So today masses won't win. You can follow the masses, but you need to know when to get out. So it's okay, guys, if you follow the trend. Don't get me wrong. I am a trend trader. You can see all of my session recaps, 90% of them are trending positions. So yes, you are a trend follower and you will follow the trend. But if you follow the trend, do not buy here. Wait for the price to retrace, then buy it. Same for short trades. You follow the crowd. It's going down, yes. But again, if you need to wait for retracement. That happens sometimes to my trades. You know that some of my trades sometimes do not hit POC. But I don't mind, I don't care. If they do not hit POC, it's okay, because I wouldn't, it's normal. Let's take this for example. My POC is here. Okay, I want to go short. And the market is here and it wants to give me a pullback. I want to enter here. I'm an individual. I don't know if other traders, I don't care if other traders will enter here. That is my view of the market. That is my Camarilla MACD method. And I have determined that I want to enter there, POC. If the market goes to here, I will be patient. But if it drops from there, I won't be entering here just because I didn't get in the trade. I will wait for other opportunity. Now, many traders are very impatient and they are trading usually one or two pairs. And because they didn't get euro-dollar POC entry, or I don't know, on their systems, a proper entry, they will be entering here, not waiting for a proper setup. That is why I trade 24 pairs. And that is why I usually find at least one or two trades during a single day. So also I can say that traders are losing their money because they don't want to trade more than two pairs. Patience is also very important. For each single trade you are going to make, you should be patient. And that is why, if you noticed, I'm giving you other setups instead of euro-dollar, because I want you to trade other pairs, not just euro-dollar. Okay? Let's take a view on my block. Swiss yen, New Zealand dollar, euro-dollar, Aussie Swissy. Let's randomly jump to another page. Swiss yen, New Zealand yen, Euro CAD, Euro New Zealand. Dollar yen, Euro dollar, cable Aussie. Many different pairs. Many different pairs. So what does it tell you, guys? What does it tell you? Okay? It tells you that I am a patient guy. If I don't get in a trade on Swiss yen, well, maybe CAD Swiss will give me an entry. I don't make any difference between euro dollar and New Zealand yen, or cable and CAD Swissy. It's the same for me. Okay? It's completely the same. Kellyan is asking me, how do you see the market in the next 5 years? Will it become more tough? Well, I don't know, Kellyan. To be honest, I don't care. If the markets remain as they are now, I will be happy. So neither harder to trade, neither, I don't know, easier to trade. For me, as soon, I don't know, if the movements are, really based on price action and historical following of the price, then we will be safe. Because I am following the price, I am following historical buyers and sellers, find points of confluence there, so we will be safe. I can also witness that some of methods are withstood the test of time. So sign in for a premium webinar, MTF MACD, multi-time frame MACD. I will show you a good strategy based on confluence of higher and lower MACD time frames. So effectively you will be scalping on 1 hour time frame, you will see. And that strategy has withstood the test of time, considering it's a scalping strategy. So some strategies and some methods just are time proof. And of course Camarilla MACD, I think it's time proof because it uses price action method with a proven indicator such as MACD. So guys, you need to know, you need to understand the true nature of the market. The true nature of the market. Traders should finally learn that news are basically giving the necessary volatility to market. So that thing is, I was trying to get you, and I was trying to get you in a cable trade yesterday, but I didn't have the time to post it on Admiral Markets because you saw that the pound was falling. I knew it will go up, although I traded other pair on GBP, not GBP dollar. I knew that it will jump from somewhere around 70.95 to 70.40. What happened? Because market was preparing for the news. And many times, if you see that, let's say, cable is in a long trend, that news can give you the better price. So news will give you the volatility to enter at a lower price. Now, if the price jumps straight up from this point, don't be disappointed because you made a right decision to wait for the market, okay? To wait for a proper retracement. So guys, this is everything I wanted to share with you today. I think I have managed to tell you most of those things why traders are losing money. And I hope that you are not amongst those traders who are losing money, or if you lose, try to lose a small percent of your account. That is why I'm really inviting you to all of those great session recaps and webinars. Session recaps didn't have a single losing week since the inception, since the beginning. Now it's only the matter of time whether you were making 20, 30, 50 or 100 pips of profits. Also, be sure to visit tomorrow's webinar, mine and Chris, our personal stories and stages of trading, how we became professional traders. All of those webinars are for you. And it's in my best interest to teach you how to stay profitable. Don't let thrill euphoria overwhelm you because you will be sucked in a downward spiral. Be calm, always use a stop loss, and be realistic in your expectations. Now, if you have anything to ask, go ahead and ask me. If everything, assuming that you don't have any questions, well, I can assume safely that everything is clear, so we can call it a day. Mind you, however, that on Friday we won't trade because on Friday there will be Independence Day in US, so markets will be, NFP is tomorrow, so they moved NFP for tomorrow because Friday is Independence Day. So tomorrow there will be a lot of volatility in market. So guys, thank you for your attention again. I will talk to you very, very soon. Be sure to sign up for a premium webinar, MTF MACD, that is multiple time frame MACD, two-line MACD. It will help you in your trades, and I will show you a good 1 hour scalping method with multiple time frame MACD. So thank you guys, and talk to you very, very soon. Cheers, everyone. Thank you.